are you looking at the great inflation debate and what you're expecting to see over the coming months?
Listen, I think that we're going to see asset prices higher. I think they're going to continue to go higher, but it doesn't mean things move in a straight line. So right now, I'm watching most closely the 10 and the 30-year bonds as well as the 5-year note. I mean, the yield in the 5-year earlier this week hit the highest level since February of 2020. We're talking about really before the big move on the pandemic. So the spread earlier this week too between 5 and 30s hit the tightest since April of 2020. So we're seeing some pretty big moves across the yield space. In the 30-year bond yield, I'm looking at a chart on the yield, not the prices, but it's hit against a trendline resistance several times this week before backing off. So again, then you got the 10-year up against 1.7%. And that's been a pretty big level that a lot of people are watching too. So if yields go higher than here, I think we're going to see a little more pressure on tech. We've been overweight looking at financials and energies, but I've also begun to trim energies just a little bit just for the near term, because again, things don't move in a straight line. So I'm cautious, but the risk sentiment right now is welcoming higher prices.
Bill, when you talk about that, we're going to get some big tech next week. Alphabet, Microsoft, Apple. I doubt that they would talk about yields on the 10-year. But what other pressures might they be facing? We know supply chain. Are they going to try and hide what might be some things from us behind the supply chain and inflation concerns?
Well, I mean, we can't ignore what Snap had talked about last night in some of the ad spending. I don't think it was just ad spending relative to Apple's privacy policies, but I also think that we're looking at, you mentioned supply chain. If the goods are not accessible for the businesses, then they're not going to be spending on ads to advertise for them. So that's also a bottleneck that's starting to hit some of these social media companies. I do look at Alphabet as maybe being able to be a little insulated to some of this relative to more platform-based businesses like a Facebook or a Snap. And I think Apple, I started paring back positions in Apple late this summer when that privacy policy was announced. I think it's going to be a little bit bigger of a deal in the coming months than we've seen recently. So I'm cautious, although Microsoft is our largest position, and Alphabet is and single names is right behind that. But I am cautious in tech in general, and especially tech that doesn't make money. I mean, looking at Snap doesn't make money, and I think that's one of the things reasons why it exacerbated a little bit of the move with that announcement yesterday.